On this episode of The Trade, we'll be looking at some of the longer-term currency plays ahead of that looming FOMC meeting. Nick Twidale from Prudential Markets joins me live in the studio. Nick, thanks so much for joining me.
Thanks for having me.
Look, FX markets are pretty difficult at the moment, aren't they? Because there's just no volatility. So if you're a day trader or you're looking for that volatility, it's just been really difficult, hasn't it?
Yeah, I think it's a real patience game at the moment.
Yeah.
The volatility has really decreased, certainly over the last month. And I think you've really got to have that patience, wait for those real technical levels and then make your trades and sort of stick with them. So hopefully we're going to get a bit more volatility this week. As you said, the FOMC, if we can get something from them that's a little bit out of the norm, then that should start kicking things into action. And we've probably got some good levels coming up that may well provide some break trades or certainly some entry levels for a lot of traders.
All right then, set the scene for us. I guess let's start and look at those US 10 years. Let's look at the chart when it comes to that. The volatility has dropped when it comes to those bond yields as well. So what levels are you looking at to give us the backdrop of what you're trading in the FX markets?
Well, I think we sort of use these sort of 10 years as they're a big barometer for a lot of the market. And as you can see there, we've moved up from those really sort of dark days, I suppose, a year ago. And we're back up well above 150. We hit those highs a couple of weeks ago, up around 165. I think 168 was the high. We've dropped off a bit, and we've seen the dollar pull back on that as well, against most of the majors. I think with basically the exception of the CAD, which is going great guns thanks to a little bit of BOC action.
Yes,
and
exactly.
and also strong oil. So I think it's a good base to sort of look at things, and then if you bring that in and use that in line with some of the majors and some of the technicals that we're seeing then there's plenty of opportunity out there. But I think, you know, you move to that fundamental side of things, we really need to see something from the Fed. If we don't get anything, and it is expected that we're not really going to see anything new from them, then we're probably going to see a continuation of this grind higher in the majors against the dollar. And I think that's reflected well on that chart there, as it's just sort of come off a bit. And if it does move to the downside, and we may well see that, then that's probably going to give us more upside for the euro, the Aussie, sterling, and most of the other majors.
Yeah, that dollar index now below the 91 mark. So in your mind, are the currency markets just very much driven by this US dollar story at the moment? If we look at something like the Aussie dollar, of course it popped higher last night above that 78 cents mark. But was that a commodity story or a US dollar story? I guess it's both. They're both linked, but
I think it's a bit of a combination of the two. And sort of I was looking at the Aussie again this morning, and definitely strengthening on the crosses recently. That's something I'm looking at very closely. Euro, Aussie, sterling, Aussie, and Aussie yen. We're seeing that strength, and if we continue to see, I suppose, the same dynamics we've got in the market at the moment, then we will see Aussie continue to move to the top side, not just against the dollar, but those crosses. As you can see there, we've gone for longer term charts today, and it's still sitting nicely in that up channel. We're going to be targeting those highs that we saw earlier in the year, I think, unless things change. Now, if that commodity story changes, if we see something different out of the Fed, then maybe we're going to have a completely different ball game out there. But at the moment, I think you've got to trade what you see, and we're seeing it continue. It's definitely bid on dips. There's still a lot of demand for the Aussie out there from all ranges of clients. So I think that's probably the way to go in the short term, unless the Fed gives us something new to play with.
I mean, that 80 cent mark is obviously a psychological level, but beyond that, what are you looking at? Do you think, I mean, a lot of the banks are still calling for 83 to 85 cents longer term, but can we really play that in the short term?
I don't think we can at the moment. I think there's too many moving parts out there, and especially when we're seeing these low volatility markets, it always gets you a little bit nervous if you've been around for a while. And I think that's really what we're looking at the moment. So yes, all things remaining equal, then I think we should be able to grind above that 80 cent mark, and we're probably comfortable in the low to mid 80s. I think there's probably a little bit more to the story, certainly for the Aussie, and probably for a lot of the other currencies as well. And I think because we've seen the Aussie so strong, it's one that maybe have the potential to have the real big downside move if things change.
Okay, so basically range trade, sit on your hands until
and get ready for a break. Yeah. I
mean, talking of volatility, we did see a bit of a move in the euro overnight above that 121 mark once again. What are the charts telling us?
There's a really good resistance level just coming in. I think that will just pop up on the chart. That's on the longer term. It works on the dailies and the hourlies. I think 121.18 yesterday, and it did really come back nicely off of that. But once again, Euro's still looking relatively well bid. Dollar still offered against it, and considering the problems that Europe's had relative to the US, you'd maybe thinking it'll be a little bit lower. But once again, all those moving parts coming in, it's a good moving into the FOMC. I would suggest that's a good level to be trading one way or the other.
I guess that is the question though, one way or the other. I mean, if If we did see some movement from the Fed, what are you thinking?
I think the risk is going to be downside for euro and topside for the dollar. We're seeing dollar, as you said, the dollar index is on those lows. I think if we do get a change of stance from the Fed, then we actually could, if it does put this projection that they're seeing decent numbers out of the US, if they're going to pull the taps a bit, if we're going to see rate moves sometime in the future, I'm not entirely sure that's priced in very well to the market at the moment, and that's where we could see it. So really that would be probably a euro negative move, but we've got to see what Jerome Powell gives us.
Maybe some kind of order entry limit or something.
I think so. I mean, off that chart, you'd probably be looking for a stop loss entry topside, or just use that as your stop loss for a short play.
All right. We can't not talk about dollar yen because, of course, it is the safe haven play, and often we do see it move in opposite directions to what the rest of the currency market is doing. Of course, it traded up to that 111 mark. It's now sitting below. I think it's just looking at my screen here, just above 108, 108.24 it is in current trade. Can it get back up to those levels? Given that backdrop that you've just said of a weaker US dollar, can that play out against the yen as well?
I think going back to that, all things remaining equal, it probably doesn't get there anytime soon. I think if we do see a change of the markets, we start to see that dynamic, and maybe the BOC was a good thing for us as currency traders last week. I think we need to see some movement out of central banks to see real decent volatility come back, or at least different rhetoric from central banks, and to see some decent moves and volatility come back. Once again, like you look at those charts, it's not really giving us too much. There's probably a trading opportunity off that support trend line, and I think that's what I'd be looking at after the Fed. It does depend on what we get from Jerome. If we get same as usual, then I think you'd probably be looking to maybe trade a break of that one to the downside. It really does depend on what we're all looking at that Fed, and the real worry for a lot of the traders out there is that we just get same as normal and we're back to where we started with. But even if we get that should lead to an increase in volatility because it will give people a little bit more certainty.
What are you seeing when it comes to sentiment from the FP Markets traders? What are they buying? Do they have cash on the sidelines at the moment? Are they sitting on their hands waiting for this move, or are they still participating day trades maybe when it comes to the FX market?
We're seeing day traders still playing the ranges, and it's been a very good trade, certainly for the last month as well. It's fading moves to the top side and the downside because we're not getting any real impetus to move one way or the other. Break traders are probably not participating as much, but those guys playing the ranges and fading those moves, they're the ones that are trading, and they're pretty active, and they're making a lot of money with it.
I'm keen to know, those guys out there that are trading FX, do they have a broad asset class in their books? Like, are they trading equities as well? Do they use the FX markets to hedge their equities exposure if they're trading international stocks? How do they set up their books? Yeah,
we see a lot of different kinds of clients with various different portfolios. So some you do get guys that are just really day trading FX, and that's their sole focus. But we do see people that trade their whole portfolio across our books. They'll look to hedge their equity exposure. Some people are looking to hedge things like housing exposure as well. It's something you've got to do if you're managing your book correctly, I suppose, with correct risk and capital management protocol. You're going to see people participating across that market.
All right, interesting. Nick, thanks so much for joining me this afternoon. I'm sure we'll chat soon.
Thanks a lot.